Good morning, traders and investors. My name is Roger Scott, and I'm the Senior Strategist for WealthPress. Today is Thursday. It's March 24th, and the market's going to open up in about an hour and 44 and a half minutes to be exact with you. I like to be very specific when it comes to numbers and data. Now, as you can see here, the Nasdaq's up a whole lot, over 100 points, and normally I would make a big deal out of it. But again, with the volatility we've been seeing, with the Dow Jones moving on average of about 500 to 650 points a day, 169 points one way or the other is not too much. Nonetheless, this is a good start to the day and reflects on the overnight markets, which actually closed lower yesterday around the world. Today, the big report is going to be durable goods, jobless claims and durable goods, but jobless claims have been fairly on par. They haven't really been moving too much against us. Not worried too much about this number. Again, anything below the 4-week moving average, as you can see here, the consensus is not anything really off the charts. COVID is really not ramping up right now in the States. So the 4-week average, anything around this level is fine. Even if it's a little off, it's been stable. Durable goods is where the big question mark lies. Durable goods orders is the biggest report of the week, and it depends on whether they've been surging or not. And I'm hoping that the war haven't had a major impact on it yet. But again, this is going to be a major report. Now, if you want to know what durable goods are, it's durable goods orders are new orders placed with domestic manufacturing for factory hard goods. So this will give us a good understanding how the supply chain is impacting domestic manufacturing and whether the demand and the supply is moving in the right direction. It's a very important report that's coming out in about an hour and 44 minutes. And then we have the consumer sentiment Friday, not a huge report, but is kind of important in light of the fact that we've got earnings coming up. And earnings may be just what we need to save this market and cause a rally. Now, a few things. The bond market slightly dropped off the day before yesterday, dropped out of our little safety zone here, but then it quickly came back up. Now, I'm hoping that the bond market is going to reverse and that the people trading this bond market are going to realize that this is too much too fast. A quarter race hike in rates does not need bonds to drop 20%. Think about it. Look at this, 155 to 130. That's like 15-20% of its value. It's definitely over 15%. Let's see, 155 to 130. That's 25 points. Oh yeah, 10. It's close. It's about 15 to 20%. That's huge. Interest rates are not going up that much. So, but again, this is the long bond, and it's anticipating the future. But I think it's overstretched, way overstretched, and I'm expecting a rally up to the 137, 138 area. That should help stocks because the higher bonds go, the lower interest rates go. The lower interest rates go, the less of a wet blanket you have for the stock market. The lower bonds go, the more of a wet blanket you have for the stock market, because that means interest rates are going higher, and interest rates are not great for stocks. Now, volatility continues. Now, it's not moving lower yesterday. Market took a big dump yesterday, but look at the trend. This is since the Fed announced they're going to start taking aggressive action and gave us concrete game plan. So this is a very, very, very important indication of what's to come. But the fact that volatility is moving lower, not higher, is very stable. My concern is that it doesn't hold these levels, that it breaks through these levels. So I'm hoping that this level here, the 23 level, will break and we move below 20. If we move below 20, that means we're not in fear levels on the VIX anymore. That's very, very, very important. Now, let me talk a little bit about global economy, and then I'll talk about price levels. Joe Biden is attending meetings in Brussels where they're discussing the Ukraine crisis. Sanctions and the Russian oil embargo will likely be the top agenda. Shares rose in Moscow. This is interesting. Russian exchange resumed trading under heavy restrictions nearly 1 month after shares plunged and the exchange was shut down. I'm actually interested in investing a couple of dollars in there just to see what happens. Foreign shareholders will be unable to sell shares, a restriction Russia imposed to counter Western sanctions against its financial system and the weakening ruble. This is all they've got, folks. Think about how pathetic it is. This is what they're doing in spite of us sanctioning them. They're preventing us from selling on their exchange. Think about how pathetic that sounds. That's just so pathetic. Do you guys have an interest in selling your shares on the Russian exchange? I mean, It's laughable, really. I mean, it really is kind of funny. That's pathetic. Energy stocks rose as crude oil prices climbed more than 5%. Hess rose 4.6% for the biggest gain in the S&P. That has been one of my stocks on my S&P hit list. It's been up there quite a bit. The attack on Ukraine has pushed already surging energy and commodity prices even higher, which is why we're long CF and so forth. Oil prices lost $1. They're now at 113. I expected us to peak at 100, and then after the war started, I went to 120. A lot of my guys even thought we would go to 150. I think 120, 130 is the high. I think we've peaked out. Many of the higher costs incurred by businesses have been passed on to consumers, and higher prices for food, clothing, other goods could lead them to cut spending, resulting in lower economic growth. Central banks have been reacting by raising rates to try to counter the impact of inflation. There's nothing here that I just read to you that we did not already know. Investors are waiting for corporate earnings. If earnings are a lot better than expected, that can really, really, really drive this market higher. Now, let me show you some important levels. We are abutting the 200-day moving average on the Dow, and we're bouncing down from it. The only thing that's encouraging right now is the fact that the highs are still getting higher, and I'm hoping that we can overcome this by moving higher. Now, granted, we've had several up days, so a little bit of a consolidation around this area. Actually, let me reduce this area right here. Is not that abnormal in light of the rally that we've seen, but I'm very curious how we'll end or how we'll get out of this area. If we break down, it's bad, but we still have higher highs, so we have to wait till we're at this trend level. Or if we break the 200-day moving average, then we're golden. Now, to give us some indication of how the Dow might do, we might want to look at the SPY. And the SPY already broke above this level, but now it's struggling. And again, if it breaks down here, it's not going to be pretty because it would kind of happen what happened over here. But I'm hoping, even if it breaks down, that it doesn't break this floor, the 419 level. But I'm hoping, and this is just a pure hope at this point, we can all dream and hope that we break above this level. If we break above this level, the next level is going to be the 459.27 or the 460 level. If we break this level, we're going to go higher. On the QQQ, oops, excuse me, I don't know how the W got in there. On the QQQ, the level we need to break is right there. It's the 357, the 358 level, and then we need to break the 369 level. So again, the 358 level and the 368 level. If we can break that, we're looking good. But I'm telling you right now, until we break the 370 level, nothing good is going to happen here. Now, again, today, energies are continuously leading, and we got to go with the trend, and they're moving higher again. So right now, my favorite ETF would be the energy ETF. I like this ETF a lot right now. It's good and it's liquid. And what I would do is I would be looking at the options that expire, let's see here, all the way in September, giving us plenty of time. So there's very little decay. I mean, you can go to you can go to 617 still. You're still good with 617. But again, I would be looking right now at the 76, 77 strike price. I mean, look at the open interest, look at the spreads, nothing else to worry about. And you could do a spread. You could do a 76 via 84. 76 via 84 looks really good. So I would buy the 76 and I'd sell the 84 on the June expiration. XLE. I like that stock. Now, let's look at some major stocks and let's see what's leading and what's lagging right now. Gotta see what's leading and what's lagging right now. While I'm here, let me just really quickly check something here. Nope, nothing there yet. All right. Let's organize this so we could see here. Again, Occidental, Mosaic, CF Industries, no change. Look at this. It's like the same story. Devon, Apache. Let me show you this. 1 month ago, Devon, US Marathon, Pioneer, Apache, CF is right there. This is 500 stocks. So let me go back another month. Devon, Apache, Ford is here. It's not there anymore. Tesla and Ford are out of here now. But as you can see here, not all that different. So when we go to today, and Occidental, Mosaic, CF Industrial, same thing, not that much of a deviation. We still have highly priced energy stocks here. You've got a couple of like Dollar Tree, Newmont, Freeport, Nucor, the metals are here, the industrial are right here, the basic materials are right here. But basically, defensive, 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 and defensive again. And again, I like the XLE right now, and I like the June expiration. Now, before I let you go, I got something important for you. Folks, I've coded an algorithm. This algorithm is designed to capitalize in any market conditions. Bull market, bear market, neutral market. It even has a hedge. It isolates the top stocks on Wall Street, which is what I call super stocks. All I have to do is flip a switch on the algo to get a brand new batch of trades. And I want to make sure everyone can get in on these opportunities. So I'm inviting you to join me and other traders that already are capitalizing on these super stocks right now. Click the link below to watch my super stock algorithmic trading strategy at work. Do it now. Tomorrow we're going to talk about my weekly recap, biggest winners, biggest losers, and what to expect next week. Follow the link. If you're watching on YouTube, follow the link below this video in the descriptor in the Wealth Press YouTube channel, and leave us some comments, feedbacks. I haven't received love letters from you. Support at marketgeeks.com. I want to hear from you, the good, the bad, and the ugly. Bye, guys. Have a great, great day.